Income security is where the government tries to secure the amount of money, the ability for its citizens, not just companies and small businesses, but individuals, to maintain their income. And so that is where the CARES Act comes in play, and the fact that the coronavirus is impacting people's income. So essentially, it is doing a big part of the charter of this country, and part of the Constitution is that the government protects its citizens and provides a safety net. Hi, this is JJ. Welcome back to my channel. For those of you who are new, I invite you to like, subscribe, share, and hit the notification bell so you get alerts when I upload a new video. Anyway, so right now the globe is experiencing a global pandemic with the outbreak of the novel coronavirus called COVID-19. It's taken a toll on our health systems, and sadly is sickening and tragically killing a lot of people around the world. One of the tolls that it's taking, it's also taking and to put a dent into the world economies, and particularly because one of the ways that we can fight this virus is that we have to have people stay home in order to flatten the curve. And by flatten the curve, I mean lower. So if there's like a bell curve, lower the number of new cases and lower the number of existing cases that exist in any particular area. So a lot of people losing their jobs. A lot of the industries that require or rely on people congregating, the entertainment industry, that relies on touch points, human touch points, the nail techs, hairstylists, barbers, taxi drivers, venues, attractions, malls, where people come in groups to congregate and shop and do all sorts of stuff and eat. All those industries, restaurant industries, are failing and have had to let people go because they can't sustain their businesses when they're not getting any revenue from customers. And so we've had 10 million people in the United States file for unemployment in the last 2 years. This chart is out. It's just crazy. So the government has, in its infinite wisdom, decided to give people relief. And so in the form of a rebate check. This is not the first time that the United States government has given its citizens rebate checks. I remember one time in particular was in 2007. George W. Bush was president. I was married, pregnant with my third child. I had 2 kids at the time, and he gave American citizens checks in order to stimulate the economy in hopes that people will go out and spend, and it'll just bring the economy back. At that time, we had already filed. In 2008, we got our refund checks. And then after that, a couple of weeks later, we got another check. We did not need to pay that check back. And so that's why I'm doing this video, to dispel some of the mess out there regarding the CARES Act. And we're going to talk specifically about the coronavirus relief. So I think it's important. I want to start with 2 basic premises, or just basic piece of knowledge that we all should have. So some people may know, some people may forget, some people remember from civics class, or if they took an economics class in college, or they may be in that field. And so this doesn't apply to you. But for a lot of people, I think a lot of Americans simply do not know how the government, like when they pay their taxes, or their employers take their taxes out of their funds, out of their paychecks, and send it to the government. They have no clue what the government does with that money. And then they just don't know how the government spends that money. And they don't even know how much money the government makes. So I think we should start from the basics. I think it's really important. The biggest source of funding comes from income tax revenue for the United States government. And employers collect the percentage of income tax based on your tax bracket, your salary, and they collect that for you, and they send that to the federal government on a quarterly basis. So if you're getting paid, let's say $10,000 a year, for example, and that means you're in the 10% tax bracket. That means $1,000 of that $10,000 you earn goes to the federal government. So every month, for the 10 months, your employer would take out $100 and send that to the government. So after 10 months, that's $1,000. And so they send your money in advance to the government. There are people who do not have employers. There are people like me who are self-employed. There's independent contractors. There are consultants. There are 1099 workers, meaning that there's no one responsible for their health care and for sending off their payments to the government. So those folks have to make their own quarterly payment to the government. And sometimes people choose, rather than send it to the government so the government just hold it, they'll put it in an interest-bearing account, and then on tax day come the following year in April, they'll just write a check that's been in that amount of money in their interest account to the government. So those people, for the most part, don't get refunds from the government. They may, if they can deduct some taxes. For the most part, that's another group of people who pay income tax to the government. Second source of big revenue for the United States government is payroll tax that they get from employers. Third is corporate income tax. So what does the government do with this revenue sources that it gets from income, corporate taxes, payroll taxes? Well, it pays for stuff like Social Security fund. It goes to defense. The military gets a big piece of that. It also goes to fund projects. Some of that money goes to grants. And another thing, a big piece, is income security. What is income security? Income security is where the government tries to secure the amount of money, the ability for its citizens, not just companies and small businesses, but individuals, to maintain their income. And so that is where the CARES Act comes in play, and the fact that the coronavirus is impacting people's income. So essentially, it is doing a big part of the charter of this country, and part of the Constitution is that the government protects its citizens and provides a safe. And I don't want to get into politics. However, I do want to emphasize the part that government collects our income over the years, every year of our lives. So every time we work, it collects this money. And that when we need it, that safety net, when we are unemployed, when we are disabled, we can count on the government, that safety net that we all pulled into, to be able to help us out. So there's a term where sometimes people call it entitlements, and there's resentment of people when they go and ask the government for help, for food, and for assistance. However, it's something that people should expect because it's in the pool already. That's part of their job, is to help people out, is to bail us all out, not just the corporations, to bail out its citizens. This is what separates the United States and other richer countries with strong democracies from poor nations that don't have an income source, that have a lot of poverty, where there's no large middle class, where there's no tax base from which the government can draw money from to provide services for safety nets. And those countries rely on what's called NGOs, non-governmental organizations, or they rely on charity. They rely on aid from other nations to feed their poor. We don't have that because we have enough money. We pull this money in, so we expect it. So off my not a political horse, but just off that for a second, let's go back to CARES. CARES Act stands for Coronavirus Aid, Relief, and Economic Security Act. So the money it was about little over $2 trillion that was funded by the government, and that $603 billion is going to pay individuals in form of rebate checks. There's another $500 billion that's going to go to corporations. There's another $339 billion that goes to small businesses. Another $337 that goes to state and local governments, and the state and local governments are going to do grants, and they're also going to give money to ailing businesses and other folks that are affected independently and dependently, individually or indirectly, of this pandemic in the United States. Another pot, the remaining is going to go to, there's $100 billion, for example, that goes to hospitals that are caring for coronavirus patients or doing research on it. Also to for meals security, for child care support, other different programmatic impact of the bills. Now, where does this money come from? And I think that's really important. So remember I mentioned how the United States government collects revenue. So the revenue that it collects, it goes into different funds. So some of the funds, it's a Social Security fund, there's a disaster relief fund, there's another fund for a housing security fund. So the people so that money is there and it's a pool, it's collecting, there's some interest rates collecting, but that money is there to help bail us out. We don't have to pay back that money because that's what we've already paid it. We put it in a pot to help us out when we're in trouble. Anyway, so that's where the funding is coming from. I mentioned that the beneficiaries of this funds are going to be individuals, businesses, is going to be landlords, for example. So what are the entities? What are the bodies in the executive branch of the United States government that deal with individuals and related income? The IRS. What is the body that deals with small businesses? The SBA. What's the body that deals with housing, development, landlords mortgages, HUD, housing and urban development. So those are the agency, depending on who they already have a relationship with. This act says you guys already have people's accounts. You guys already have people's access to their where they are. You have these databases. It makes sense for you to get this money to different people, that you distribute the money. That is why the IRS is the one distributing money for individuals. That is what's causing the confusion, is because people are forgetting or just linking, or just by habit. When they think of IRS, they think taxes and refund checks, or they think of, I have to pay the government, or I have to get a refund check from the government. I'm frustrated because a lot of people who, maybe because of lack of understanding of how our government works, how taxation works, basic accounting principles, when they see language that says that this tax is essentially is an advance or a tax credit, they, in their tunnel, in their vision of their perspective of life, their employer takes out money from them every year, and starting January 1 through April, they file their tax returns and they get a refund. But a lot of people don't get refunds. People who are in SSI and who are in disability are going to get checks. They don't get refunds. People who owe the government every year, they don't get refunds. People who are unemployed or underemployed, they don't get refunds. So does it make sense that all those people are going to be getting checks? None of them have to pay it back. Only the people who get refunds would have to pay it back. Doesn't make sense, does it? So listen up. So I'm explaining to you how it works. Individuals who make up to $75,000 annually will be getting $1,200. Married couples that make up to $150,000 will be getting $2,400. And then any families that have children, or any person that has a child under 17, so that means 16 and under, will get $500 per child. And that's another issue regarding the exclusion of 17-year-olds and young adults, but we'll talk about that later. So that is it. However, if you make over $75,000 an individual, or you make over $150,000 as a couple, you get less money up until $198,000. So it's like you get a little bit less money than the full check, because you have a little bit higher income. People are confused about is there's language that says that this rebate check is being treated as an advance of a tax credit. It's an accounting principles. Essentially, in 2021, when you file your 2020 taxes, they're going to true up and just move numbers and books around. That does not mean that they're going to deduct your taxes from the money. It's just an accounting principle. Let me break this down in terms of an individual to make it more clear. If there's a person who's a seasonal worker, or they have a job where they work 10 months out of the year, and let's say their income is $10,000. For simplicity's sake, let's just say $10,000. At a $10,000 annual salary, let's say their income bracket, their tax bracket says they have to pay 10% income. So we're going to leave out taxes and Social Security and other things that come out their check, just for simplicity's sake, and just say that they, because of their 10% tax bracket, they owe the government $1,000 of their $10,000 salary, right? Their employers take out $100 every month. Let's say they get paid that $1,000 each month. Their employers take out $100 each month and send it, and quarterly they send it to the government. So the government in advance has, based on their tax bracket, their $1,000 taxes in advance and hold it up for them. Now, let's say that person had a baby before the end of the year. So they had a baby. When they go to file their taxes, one of the things they'll be able to get a tax credit for, which is a deduction of their income, is for children. So the child credit is, how much is a child credit? Is $2,000. So instead of them having an income of $10,000, their income is going to be $8,000. So at $8,000, they don't have a 10% tax rate. They have a lower tax rate. So that means they overpaid the government. That means the money that their employers had that gave the federal government advance, the federal government owes them back that money. So when they do their taxes, $2,000 minus the $1,000 the government took out already, that means the government owes them a refund of $1,000. So that's how you get, that's what the tax credit does. A tax credit reduces your income. A tax credit is not the same as a refund. Tax credit is a deduction of your taxable income. So that woman who had a baby in 2020, if it was this year, because of the CARES Act, she would get, in addition to her $1,200, because she's making under $75,000 check, she would also get a $500 check for that baby. So her total check is going to be $1,700, right? So the $1,700 they gave her, they're putting in the books as if they're putting that book, it's in 2021 when she says, okay, the total deductions I have $2,000. I have $2,000 deductions plus some other ones. They're going to say, well, we're going to calculate, we advanced you that credit the previous year, but we're going to just short up and put it back in the books. So it's an accounting thing. They're just putting that credit back in the books. That doesn't mean that she's going to have less of a deduction the following year. No, that just means that they advanced her the deduction that they know she's going to be able to take. Her tax refund is $1,000. They're not going to offset the fact that she got $1,700 previous year and say, okay, now you owe us, the government, $700 because we gave you $1,700 as part of the CARES Act in 2020. Now in 2021, the government owes you $1,000 refund. You owe us $700. You know why? Because in the law, it says, let me read it for her. Section 6428 says an exception from the Treasury offset program. Any credit or refund allowed or made to any individual by any reason under the IRS section shall not be subject to reduction or offset. So the law says that they're not going to take the money off your refund. So I need people to stop going around saying, oh, it's just an advance of your refund. They're going to take the money out your refund. They're not. Stop saying that. It's not true. It's in the law. The law says they can't do it. This light's getting dark. Oh, the light's not coming on. Okay. So the short answer is that there's a provision in the law that says they're not going to take the money from a future refund. So that's not an issue. And I could have said in the beginning, but you wouldn't have sat down and gotten this great, wonderful lesson on how taxation and government revenue and all that stuff works. People may say, how can the government afford to do this? Because the United States has something like $16 trillion deficit, and we owe China so much money. However, I liken it to anyone who has a home that they owe money, a mortgage that they owe money on, or they have a car. They still have that fund, their rainy day fund or their emergency fund that they would use in case they need a root canal. So you're not going to let your tooth get rotten and you see something going wrong. You're going to go take that money out and pay to fix that tooth. So that's what the government is doing. These different funds that they've collected over the years, the disaster fund, that is for that money. That's what it's for. So we're not supposed to pay back something that we already paid for in advance, and that's what it's for. I know it's hard for people to understand that because just trust in the government, just the belief that nothing is free, and it really isn't free. However, but it's like, why would the government do this? They've done this in the past. Saying no, there's precedent for this where you pay, the government gives you money, you don't deduct it from your refund check. So anyway, so I want to talk a little bit about the fact that the 17-year-olds can't get the money and young adults in college, and that's because the child care credit can only go to 16-year-olds, so they just pattern it off of that. And then there's another provision that says if you are claimed by if someone claims you on the refund on their income tax, then you can't get funding. So it leaves out a lot of college kids who work and have bills. That's unfair because some kids rely on that money. Some kids help out their parents. Some kids are struggling. Some kids are working their way through college, and they lost money. They lost jobs. They lost opportunities. Some of them work in retail and waitressing, or they worked in all these different industries that are losing money, but yet they're not going to be getting the same relief as, let's say, an adult who has a job, who didn't lose their job, who's not really losing anything, who has savings, and essentially, the money is nice, but they don't necessarily need it. So there are people who don't necessarily need this money that are going to be getting the money, and then there's young adults that don't have it. And I know that the government tied it to the child care credit. However, parents still can't get a credit for people who are not children but are other dependents. And so if you're gonna let you recognize those individuals in the taxes as other dependents, so why are you not recognizing them now in this act? I don't know. They need to change that. That's one thing. Let's lobby. Let's get the lobby to make sure there's other iterations of this bill coming through, and I think there's plans to create new more relief if it continues, and by the way it's looking, it looks like it's going to continue. So let's find some way to get young adults to get something in it. I don't know. I don't think it's unreasonable for the people that expect to not expect them to get something. Anyway, that's it. JJ Gat. I hope that was helpful. It was a long video, but I really felt I need to explain this. Like, subscribe, follow me, and that's it. Talk to you later. See you later. Bye-bye. Totally got dark doing that. I started it around 7. I knew going into it I had 36 minutes worth of sunlight, and I think that did a good job.